And when the narrative gains popular currency among generalist investors, that commodity with a lower unit price, which is to say silver, begins to move further and faster. So I think silver speculators will need to watch the gold market.
In Rick Rule's view, silver fits the bill perfectly since it has no competition. Despite the sideways dance, Rule sees opportunity where others see frustration. He reminds us that the real gains come before the crowd catches on. In the face of volatility, he predicts a rewarding future for those who embrace it. So stay tuned.
I'll do my best to unpack it. First of all, I'm delighted with the information from the Silver Institute, because neither Keith nor I have the resources to understand anything like the totality of the silver market. At the Silver Institute, they have a bunch of smart young researchers who do nothing else full time. And the report, which I've studied in some detail, is an interesting read. It talks about the fact that there's a primary deficit for 2024 of approximately 1.2 billion ounces. It's important to note that the report doesn't attempt to categorize above ground inventories for the simple reason that nobody knows. A whole bunch of silver constitutes private wealth, particularly in South Asia. When people hold private wealth to shield themselves from their government, they very seldom identify that private wealth to the government. So we don't know what the above ground inventories are like. What we do know is that the low price for silver has made primary silver mining, that is to say, silver produced from silver mines, uneconomic or marginally economic in most cases. Most silver, in fact, is produced as a byproduct of copper mines, lead mines, zinc mines, or gold mines. And it is true that a recession, which reduced copper, lead, and zinc production, would probably have a deleterious impact on silver production. But silver demand might fall too, which is to say, if you are concerned about a recession, be concerned about the silver price. It will be a mixed blessing. It will reduce supply. It might reduce demand. It is important, though, to note that the low silver price right now depresses the biggest source of silver production, which is recycling. For many industrial applications, at $24 or $25 silver, the value of the money recovered in recycling operations is not enough to justify the recycling. And the industrial uses of silver are growing very rapidly. Its reflective properties and conductive properties make it absolutely a necessary component of solar energy, hence the Chinese fascination with silver. But importantly, too, silver is a wonderful germicide, and there are very rapid increases in utilization in water and wastewater treatment, in sanitation, and in medical. Maybe the fastest growing application that we're seeing with regards to silver happens here. It's also important to note, though, that the quantum increases in silver price that we've seen occasionally in the past are really a function of investment and speculative demand. That historically, precious metals bull markets are led by gold. They're led by the fear buyer. And when the narrative gains popular currency among generalist investors, that commodity with a lower unit price, which is to say silver, begins to move further and faster. So I think silver speculators will need to watch the gold market. I think it's important, too, to note that in every currency other than the U.S. dollar, we're in a gold bull market. So I think that's important to understand. I think I've covered every point in your question, but at age 71, perhaps my memory failed me. I suspect that you are continuing to see leakage of physical silver inventories held by individuals, particularly in South Asia, India, Pakistan, Bangladesh, Sri Lanka. Those societies have a millennium-long fascination for silver. They have a need for a store of wealth outside their domestic currencies, which are inflated away. And the consequence of that is what the silver price does well in their own currency rather than in the U.S. dollar. They often dishoard that silver to use to meet household expenses and things like that. The silver market is devilishly tough to forecast because you have to know an awful lot about a lot of things. You have to know a lot about copper markets and lead markets and zinc markets. You have to know about the economy of India. Things like a drought can actually impact silver supply as peasants dishoard their silver to feed their families. So it's important to note that even an organization like the Silver Institute that has all of the resources which it can employ studying the silver market can very often be wrong. I don't know about the extent that will happen. That could happen. You and I have talked before, Dunnigan, about the fact that futures markets and silver paper markets often trade 200 times in a day the amount of silver available for physical delivery. Mostly, these trades don't settle in physical. Mostly they're rolled over, and only the differences are settled in physical. You could have a situation where you had a seller default, and that would be a truly ugly thing. Now, don't think that you're going to get a short squeeze, a real short squeeze. What will happen is that the exchanges likely will shut down for a while, and they'll cash settle. But they'll cash settle if that happened at a price much higher than today's price. So what really bothers me is that you have a market where the sort of gross trade position is in the billions of ounces, and the physical silver available for settlement is in the 60 or 70 million ounce range. You have the possibility for a truly severe disruption given the extraordinary leverage in the silver market. And by the way, many of the things that silver bugs traditionally identify with silver price manipulation have to do precisely with this. I'm not a believer that there's a decade-long or 2-decade-long or 3-decade-long conspiracy to manipulate the price of silver. But I note that trade desks manipulate every market, including markets as broad as the euro-dollar, the euro, and the US dollar. Manipulating the silver market, where you take a leveraged position, long or short, in the futures market, which is often levered 300 or 400 to 1 against the physical market, and then using borrowed physical silver to dump into the physical market at some point in time during a 24-hour period, where the trading volumes are fairly small. In other words, you maximize the amount of damage that you do to the physical market to maximize the leverage gain that you get in the futures market. I think that's been happening continually for about 20 years. The temptation to do it, where you can sell, say, $50 million worth of silver, which you have to pay interest on, to move the silver market 5 or 6% down, and then have that 5 or 6% reflected in a futures market where you have a $500 million or $1 billion leveraged long position, means that you can, if you play your cards right, generate a 50% return on capital employed in a 2 or 3 week period. The temptation to do this is, of course, extraordinary, and the leveraged function of the futures market makes this fairly easy for deep-pocketed players, sophisticated players, to accomplish. What I find is when a topic becomes popular, the easy money has been made. You and I talked 3 years ago about uranium, Dunnigan, to the collective yawn of most people. When the price of uranium was at $20 and had to go up, nobody wanted to own it. Now that uranium's at $100 and it doesn't have to go up, everybody wants to own it. When I see silver on the cover of Barron's magazine or something like that, when I see all of the scamsters that are, currently selling psilocybin stocks or AI stocks or lithium stocks crowding into the silver space, I'll be looking to take my exit. Yes, by the way, I have sold some uranium stocks. When a commodity goes from hated to unhated, it doesn't have to go to loved. When it goes from hated to unhated, the easy money has been made. Silver disappointed so many newcomers during the silver squeeze. And by the way, there's nobody angrier than a jilted lover. That it's truly hated. When I look at the comments that will accompany this interview after it's been published, Many people will say, I can't believe this guy's droning on about silver. It hasn't done anything. That's precisely why I like it, because it hasn't done anything. I like it because there's no competition. I want your viewers to look at me, look at my face. I'm a 71-year-old, bald, fat, aged male, and I can win the 100-yard dash if I'm the only guy that shows up to run. I love markets where I have no competition, and silver is a speculative market that's just that. And the silver stocks themselves are even more beat up, which is even better. They're higher leveraged, more speculative, more alpha-oriented play, not for weaklings, not for people who don't have the courage of their convictions over a long weekend. But the truth is, Dunnigan, and I've cited these statistics on your show before, when the silver stocks move, there isn't enough combined market cap among the legitimate ones to hold the money from the generalist investors. And you get moves like the silver standard move, 75 cents to $45, like the Pan American silver move, 50 cents to $40, or the granddaddy of all the silver stock moves in the 1970s, Coeur d'Alene Mine, 10 cents to $65. Not a typo. Now, this isn't for the faint of heart. Use money that you can stomach volatility on. Be prepared to wait for 18 months or 2 years. But that's not too long to wait for a 10-bagger if you have the financial and psychological fortitude to take it.
In light of our discussion inspired by Rick Rule's insightful insight, we invite you to subscribe to our YouTube channel in the future for additional exclusive interviews and investment tips. Take advantage of our exclusive interviews and valuable investment tips now to stay ahead of the curve in the ever-evolving world of finance. Subscribe today, and you will be on your way to financial freedom. Thank you.